Let's take a detailed look at Bitcoin's current market structure and walk through a clean trade setup based on key levels. Starting with the 4-hour timeframe, Bitcoin is currently trading inside a well-defined range. On the upside, price is facing strong resistance between 88,800 and 89,300. This resistance zone has rejected price multiple times in recent sessions, making it a critical area where sellers continue to step in. Each time Bitcoin approaches this zone, we see selling pressure increase, which confirms that this area is being defended. As long as price remains below this resistance, upside momentum remains limited. On the downside, Bitcoin is holding a strong support zone between 85,800 and 86,100. This support area has acted as a demand zone several times, with buyers consistently stepping in to defend price whenever it dips into this region. So structurally, Bitcoin is currently trading between resistance above and support below, forming a clear range. Now let's look at the broader trend context. Bitcoin is trading below the 200-period moving average on the 4-hour chart. This tells us that the higher timeframe trend is still weak, and that overall momentum remains neutral to bearish. Because price is below the 200 moving average, we should not expect aggressive upside continuation. Instead, trades taken in this environment should be treated as short-term opportunities rather than long-term trend reversals. Looking at volume, there is no strong expansion at the moment. This lack of volume confirms that the market is consolidating rather than trending. In consolidation phases like this, range-based trades at key support and resistance levels tend to perform better than breakout trades in the middle of the range. Based on this structure, the trade idea here is a counter-trend long from support. The planned entry for this trade is near the support zone, around 86,000. This is an area where buyers have previously shown strong interest, increasing the probability of a short-term bounce. The stop loss for this setup is placed below support at around 85,300. If price breaks and holds below this level, the support is invalidated and the trade idea is no longer valid. For profit targets, the first take profit level is set near 87,200. This allows partial profits to be taken early and helps reduce overall risk on the position. The second take profit target is placed near 88,600, just below the resistance zone. This area aligns with previous rejections and serves as a logical area to exit the remainder of the position. This setup is designed to be traded with low to moderate leverage. A leverage range of 3 to 5 times is more than sufficient for this type of range-based trade. Risk per trade should be limited to 1 to 2% of total capital to maintain long-term consistency. To summarize, Bitcoin is currently range-bound between resistance and support. The broader trend remains weak below the 200 moving average, so this trade is a short-term bounce rather than a trend reversal.